You're welcome to my channel. In this video we are going to be handling the journal and then the journal ledger. So what's the difference between the journal and the journal ledger? Journal is a book of first entry. Then this is a book of secondary entry. Like transactions are recorded in the journal before they are recorded in the ledger. Yeah, that's the difference. Then the rest of the things, the formatting is the same. The way the transactions are recorded is the same, just that in the journal ledger, you can add the description of the transactions or notes of the transactions, but the rest of the things are the same. So what do these do? They record transactions. They record transactions, and these transactions that are recorded here, they are used for making appropriate entries in the financial statements. Financial statements, we mean statement of profit or loss, the balance sheet or statement of financial position, the cash flow statement, statement of changes in equity, yeah, stuff like that. So the journal and the journal ledger, they record transactions related to all the 5 elements of financial statements, related to assets, expenses, liabilities, income, and then equity. Yeah. When recording transactions, you're supposed to follow the order. Like, you're not supposed to skip transaction 1 and first record transaction 2, and then come back to transaction 1 or first record transaction 5. You're supposed to follow the order. So they are supposed to be in order. Yeah. So the following transactions took place in the month of April 2020. So let's first draw the formatting. So this is the formatting that we are going to use. You first write the title. Journal for Mr. Y. So this question is related to Mr. Y. So journal for Mr. Y for the month of April 2020. Then the formatting of both the journal and the journal ledger is like this. Yeah, so debt, transaction, debit, and then credit. Then here you put the currency. Yeah, the currency, UDX. In case it's in dollars, you put in dollars, depending on the currency that I've given you in the question. So let's start with transaction 1. So April 1st, Mr. Y initially deposited funds from his personal savings account amounting to 2 million into the bank account of the business. So Mr. Y got money from his savings account, which was 2 million, and deposited it into the bank account of the business. So the money in the bank is increasing, and then this is like capital to the business. He's adding more capital to the business. So bank is increasing and capital is also increasing. And then bank is an asset, it increases by debiting, and then capital increases by crediting. Then when you're recording transactions, you first record the debit entry, then you record the credit entry. So it was on 1st April. So 1st April, or you can just write first since we already here. Then we have a bank account. Bank account 2 million on the debit side, since bank is increasing. 2 million. Then another account we are going to have is capital account. So the next account, like, you do not write them on the same line. You kind of paragraph it. Like this has started from here, so the next account, the credit account, you write here somewhere in the to capital account, which is 2 million. So you are supposed to put the same figures on both the debit and then the credit. So that is it. Then the next transaction is still on 1st April. He took one of his premises on rent for UGX 150,000 per month, and rent is paid in the starting of each month. So Mr. Y decided to rent office premises worth UGX 150 per month. It's paid at the start of each month. If something is paid at the start, it becomes prepaid. Yeah, like you pay before using it. So it's prepaid. So this will be prepaid rent. Yeah, prepaid rent is an asset. It's a current asset. It increases by debiting. Then how are they paying it? Using the money in the bank. So we shall debit prepaid rent, then we shall credit the bank. So still on first. So that is how it will be. Then in case you are not sure of the prepaid stuff, you can just show it rent account. Yeah, rent account. Then you put that, then bank. Then the third transaction is purchased a computer equipment. On 3rd April, purchased a computer equipment that was worth 1 million. So here we are purchasing an asset worth 1 million. So assets are increasing. So we shall debit the computer account and then we shall credit bank since we are paying it using money. So that like that. Then the next transaction is on 4th April, purchased office furniture worth 4M. So purchased furniture is increasing. You debit furniture and credit bank. So 4th furniture account, then to bank account 4M, and then 4M. Then the next transaction on 5th, paid 70,000 UGX for office expenses from the business bank account. So paying expenses increased by debiting, yeah, and paying them using bank. So bank is reducing, so we shall debit account, then credit bank account 70, then 70. Then another transaction, Mr. Y withdrew 1.2 for personal expenses. So these are drawings for personal expenses. So here it's the opposite, like when they deposit money in the bank, it's the opposite of withdrawing for personal use. So capital is reducing since they are taking some of the money. Capital is reducing, and then bank is also reducing. So we shall debit capital since capital reduces by debiting, and credit bank. So #21 capital account, then to bank account, like that. Then the last transaction, paid the salaries of employees for the month amounting to 1.5. So salary is an expense, it increases by debiting, then they're paying it using bank, and bank reduces by crediting. So we shall debit the salaries account and credit bank. The date is 30th, salaries account, then to bank account. 1.5, then 1.5. Then after this, the next thing that is supposed to be done is to get the total. Yeah, and the total, like both sides are supposed to balance, since whatever you put on the debit is what you put on the credit, so you get the same figure. Yeah, so that is the journal. So it is the same as journal ledger. Everything is the same. Yeah, everything is the same. Yeah, just that for the journal ledger, you can add descriptions or notes. Like you, for example, here, where they purchased a computer, you can be like, being a computer equipment purchased at 1 million. You write it down here. Like after reading these transactions, you write being a computer purchased for such an amount. And if you cannot come up with a note or a description, you can just repeat like the sentence, the way it was written in the question. In the question it was like, purchased computer equipment worth 1 million. So you can just repeat that. And you be like, purchased computer equipment worth 1 million. Purchased furniture worth 4M. You write it down here, like after writing this, then you write it down here. Yeah, if you can't come up with a description, repeat what was given to you in the question. Yeah, so that is all about the journal, and then the journal ledger. So in case they ask you to prepare, like they can tell you to prepare the journal, and then after you prepare individual ledgers or in the OT accounts or individual accounts. So here you just, let me rub down here and show you. So if you are to prepare individual accounts, we say bank account, debit, then credit, then capital account, debit, and then credit. So here, like for the first transaction, you go transaction per transaction to avoid confusion. For the first transaction, first April, yeah, there was bank of 2 million. So you come here in the bank account. On the debit side, you write first April, but you do not write bank, you write the opposite account, which is capital, and it is 2M. Then you go to the capital account. On the credit side, you write first April, you write bank, 2M. Then for the next transaction, we have rent account, debit, and then credit. So you come here and write first April, bank, you write 150,000. Then you come here on bank, on the credit side, you write prepaid rent, first April, prepaid rent, which is 150. Like that. You keep recording all